debt. Traders at UBA said they expect a higher stop rate at a primary market auction today, where the Debt Management Office offered a total of 161.4 billion across 3 tenor buckets. Chuka Nwachukwu, Head of Assets and Liabilities Management at UBA, joins me to wrap up the trading day. Chuka, thank you for joining us today. Pleasure to have you on the show.
Thank you.
To bring us up to speed on today's primary auction, 161.4 billion. What kind of stop rates did we see?
Okay, thank you. We expect to see stop rate around 21.9 levels or 22%. The last auction stop rate came out 21.49. That's about 249 basis point movement from the previous auction that came out at 19%. And so we expect to see higher yield again at this primary auction.
How long can this be sustained? Because these yields are quite high and they do have implications, cost implications for the issuer. So how much headroom? I know that this was supposed to be some sort of a short-term thing, as it were, but I mean, really, realistically, how sustainable is this?
I think is a short-term measure from CBN, trying to make the yield more attractive to attract investors. But like you rightly mentioned, it has a cost implication for the government. And that's why I feel that, on the monetary side, this is the best CBN can do, in order to augment the scarce foreign exchange that the country badly needed to be able to, tame the rise in the Naira. So I don't think it will last more than 6 months. I see reversal in yield maybe towards the third quarter of this year and then to the last quarter of the year, because to be honest, it's not sustainable at this high rate.
But is there some sort of a cap that you think that may not be advisable for the authorities to exceed, or it could probably go as high as possible and then we'll see that pullback?
I think that the CBN has a benchmark. I think that they know exactly what they want to do. I'm not too sure what that benchmark is now.
Okay.
It could be between maybe 25%, 24-25%. I'm not too sure what it is now, but I think there's a benchmark on that as well.
Right. Let's quickly talk about the Eurobonds market. We have about 2 minutes left. And there appears to be a healthy appetite for African sovereigns at the international debt market. We've seen the likes of, so far, Kenya, this year, Cote d'Ivoire, and the Republic of Benin. They've all successfully issued Eurobonds, and we're seeing rates as somewhere around 8%. Can Nigeria tap the Eurobond as early as April this year?
Yeah, I think that the Eurobond market is highly lucrative now. We're seeing you drop as low as as a single digit. So for Nigerian Eurobond markets, Eurobonds are all very attractive due to the economic opportunities in the country, not minding the short-term issues we are facing. So if Nigeria comes in with our own Eurobond, it will be more attractive than the rest of Africa. I believe so. Right.
Bring us up to speed on other segments of the market. The Naira, I see that the Naira continues to trade at, is it 1516 at NAFEM and NAFEX? Bring us up to speed. Okay,
yeah, so let me just briefly talk on the liquidity situation.
Right.
Market is very tight. Yes, on Monday, the market opened in repo of 2.5 trillion. It's currently around 2.2 trillion. The reason being that, a lot of liquidity is leaving the market, especially with the FX inflow that is, FX intervention that is being offered by the CBN. And so that brings me to your question as regard the exchange rate. Currently, the NAFEM is trading at about 1,603 levels. I see that it's been hovering between that levels, and that's probably what we are going to see through the rest of the week.
I was going to say that from a price discovery point of view, is that some kind of a Is that a clue as to where the Naira perhaps realistically will be trading going forward? I know that's a difficult question to answer, but just if you can.
Well, I think that I feel that the right benchmark for Naira, 1,300, 1,400, presently. That's what I think would be more ideal. The reason being that, we still have this inflow issues, the demand, overweighing the supply. And so the oil market is on our own part. We are not really producing enough, and so we are not able to, to gain the needed exchange, foreign exchange that we need. And so as long as some of these parameters are in place and they're not addressed, we see Naira hover between 1,300 to 1,500.
Okay, thank you so much for bringing us up to speed, Chuka. Always a pleasure to have you on the show. Thank you very much indeed. Chuka Nwachukwu, Head of Assets and Liabilities Management at UBA.